Hey traders, David Frost, LazyEminiTrader.com. I'm here with another post-market update just to go over the S&P 500 Emini Futures contract. What I'm about to describe applies to any chart you can find. Doesn't matter whether it's the E-mini contract, doesn't matter whether it's a commodity, it doesn't matter whether it's a stock, an exchange-traded fund, makes no difference. All charts act and react the same exact way. The vertical line you see running up and down the screen represents the break from the prior trading day to today's activity. Today happens to be August 11th, 2017. The horizontal lines running across the screen represent the support and resistance for today's activity. These are institutional support and resistance areas. Institutional support and resistance areas represent where the big money is likely to cause a reaction in the market. I provide these levels to traders each and every morning right before the opening bell. As you can see, there are three levels on the charts: 2437, 2442, and 2449. There are other levels below and above provided to members in the morning. However, these are the only ones that came into play today. In fact, the 2449 didn't come into play. However, we came close, and I'll get into that in a second. As you can see, the open of the market, which is 9:35, which means it's the first 5-minute candle of the day. We're on a 5-minute chart. The market opened at 2438.75, ran right up to making a high of 2442.25, backing off, and just minutes later was down at a low of 2437, identified by one of the horizontal lines as a support area for the day. And as you can see, the market then made it back up to the 2442 and busted through. What I teach my traders is the first hit of a level is your best opportunity for a trade. The second, third, and beyond, not so much. The more the market beats on a certain area, the more prone it's going to be to break through, either to the upside in this case, or to the downside. So what you'll see next over here is as the market got above the 2442, that became a support level and the market started to work its way higher. If the market were to work its way up to 2449, which is the top horizontal line, that would have been another shorting opportunity. However, we didn't get there. Now, there is reason to believe that this area in here was going to be resistance to the market, mainly because we have a bunch of pivots from a prior trading day. And generally speaking, when you have pivots like that, they're telling you that that price level is important to the market. Therefore, when the market reaches those pivots again, or that price area again, it will be important to the market once again. These are some of the things that I teach my traders each and every day. How to recognize what price levels are important to the market. Now, the reason why the top level at 2449, the horizontal line, was more important than those pivots is because they're institutional support levels. There are other reasons on the chart why the 2449 was more important than this area that came in right about 2445. In trading, we want to take trades at the highest probability areas we can find. In my view, the 2445 wasn't nearly as high of a probability trade as the 2449 would have been, so I opted for the higher probability trade. However, there is a very specific reason on the chart why the market changed trend right here. It's another one of the techniques I teach my traders how to identify when a signal of a trend change is at hand. In fact, there are 3 specific reasons why traders could have identified that a trend change was about to take place right where this blue circle is. These are some of the things that are taught in my course at LazyEminiTrader.com. So as we move along, you can see how the 2442 was important to the market. We spent the majority of the middle part of the day bantering back and forth, up and down, through that level, 2442. That's the market's way of telling you that that price level is extremely important. Remember, these are price levels that my traders get right before the opening bell. Here's the email that gets sent to them. This one arrived at 9:26 a.m. and you can see right here the 2442 level, the 24.49 and the 24.37, and then there were some other levels that the market did not reach today. But these are sent right before the opening bell. They are institutional support and resistance areas. Fast forwarding to the latter part of the trading session, you can see how when the market started down into the end of the day, again, there's another specific reason why the market found support at the 24.37 level. It's not only that it was listed as a support area for the day, there's another reason which has to do with the amount of time it took to get from this pivot high all the way down to the 24.37 level. And of course, you can see how all day long, that level and the 24.42 level was supportive or resistant to the market. That shows you the importance of these price levels. And then at the end of the day, we tried to rally back up one more time. And where were we rejected? We were rejected at the 24.42 level one more time into the end of the trading day. There are a lot of little nuances on the charts that my traders understand how to read, when to expect a reaction in the market, and of course how to trade it accordingly. If you want to learn more, how to read the charts, how to read the market, how to understand what the market is telling you each and every day, no matter what chart you're looking at, whether it's an E-mini futures contract, a stock, a commodity, or an ETF, it makes no difference. You can improve your trading if you learn how to read the charts. I'm David Frost, LazyEMiniTrader.com. Thanks for tuning in, traders.